Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a look at the Chinese artificial intelligence company DeepSeek and its ramifications on markets. Chinese AI startup DeepSeek has disrupted the tech landscape, triggering a sell-off in US tech stocks earlier in the week. DeepSeek claiming it took just 2 months and less than $6 million to build its advanced language model DeepSeek R1 using NVIDIA's less advanced H800 chips. The tech-heavy Nasdaq tumbled 3% during Monday's trade in the US, its steepest drop in 6 weeks, sending its total market value down by nearly $1 trillion from Friday's close. NVIDIA shares plunged almost 17% in the session, their biggest one-day loss since the onset of the COVID-19 pandemic in March 2020. NVIDIA shed almost $600 billion in market value, the biggest in stock market history, and eclipsing its own previous record of a $279 billion wipeout in September. US President Trump called the disruption a wake-up call, with the broader sell-off in tech stocks sparked by concerns US megatech companies have poured too much into developing AI when this Chinese firm appears to provide a comparable service at a fraction of the cost.
So that really brings into question why you would pay somebody like OpenAI, $300 Aussie dollars a month when there's an equivalent model that can be released. And it really it's not just DeepSeek. I mean, this will happen in the foundational model sector again and again. Every time there's a development, every time a really good model, releases its weights, they'll effectively almost invalidate all the spending that has been done to date everywhere else.
Well, a note from Citi analysts suggesting the DeepSeek developments should have limited impacts on near-term demand for data centers didn't stop the ASX-listed real estate and tech sectors plunging into the red during Tuesday's trade. Shares in data centers operator NextDC were punished, along with data center investment trust DigiCo. Uranium miners faced pressure as DeepSeek raised concerns among investors about the potential for AI-driven efficiency to reduce demand for nuclear power, coinciding with new supply from industry leader Cameco coming online. And real estate stocks took a hit, led by an 8% drop in industrial property manager Goodman Group. But David Lane from Ord Minnett is still positive on the outlook.
It is still a hot sector, but probably not as hot as what it was. So we're now starting to see a little bit more availability come up. There was a period of time 12 or 18 months ago where it was very, very difficult to get an industrial property. There is a bit more supply available now. So still a sector where we think that there is long-term growth and that logistics would be an important component. And even long-term, irrespective of what's happened over the last 24 hours, we still think that long-term data centers will be an important component of the world.
Well, the average target price on Goodman is a buy, according to Refinitiv, with a target price of $38.20, suggesting 9% upside. Citi analysts don't believe leading IAL companies will move away from the more advanced GPUs, instead expecting DeepSeek to drive increased demand for data centers globally. Citi has a buy on Goodman with a price target of $40, a more than 14% upside from current levels. However, analysts at Morningstar call the decline in Tuesday a reality check on the data center hype. They retain a fair value estimate on the stock with a price target of $27, down from Tuesday's $35 closing price. And despite its more than 7% slump in the aftermath of the DeepSeek shock, analysts are still positive on the outlook for NextDC. The average price target on the stock is $19.31, suggesting a 31% upside, and 3 of the 15 analysts surveyed by Refinitiv suggest buying the stock, while the other 12 have a strong buy. Yet ASX TradeWatch data suggests investors should proceed with caution, as shares appear to be weak with little demand from investors, the 200-day moving average currently sloping downwards. When it comes to DigiCo, UBS has initiated coverage of the stock with a buy rating and a $5.60 target price, a more than 37% upside. The analysts note the REIT is a diversified owner, operator and developer of data centres with capacity, they say, for future expansion. Well, despite the panic, some analysts suggest efficient AI technologies like DeepSeek's may ultimately benefit the industry by increasing accessibility and hardware demand, potentially boosting companies like Nvidia in the long term. Michael Brown from Pepperstone saying cheaper AI-related costs would be a boon for the sector if it were to democratize the industry.
Just because you can do something a little bit cheaper and faster doesn't mean that you stop doing it. In fact, it may just, I think what Nvidia said was that this will probably drive more demand for AI because it's going to reduce the cost, and so more people are going to do it, so we're going to need more GPUs. So rather than saying, okay, you need less GPUs because you can run these things faster, well, if you've got more people running them, then that sort of offsets some of that as well. So I think it's very difficult to look at the long-term implications of these things, because what's around the corner? Is there an even faster, cheaper, less energy-intensive model that's about to be launched in a week or a month or a year's time?
And Sean Hickman from Market Matters says the road to AI adoption is long and there's room for plenty more market winners and losers.
I think this is a left side move from everyone, the vast majority of people anyway. And that's what's caused these big shifts in the valuation, at least short-term valuation of the AI space. And I think you've got to cast your mind back to the first player advantage doesn't always mean that these stocks are going to be the successful stocks in a few years' time. Just think back to your first mobile phone. I remember I had a Nokia, or before that a Motorola, and then a BlackBerry. Today, like most people, I've got an iPhone. Obviously, 25% of people have got Samsung. So just because people have been talking about AI and AI companies have been progressing very, very well in the last year or two, doesn't mean they'll be the ones that are leading the pack in 5 years' time.
And that is your IG Macro Intelligence for this week. We'll see you next week.